Stocks were swinging today based on the news headlines that we got from fresh tariff notices across 150 countries, Powell rumors rattling the markets, inflation data, Fed commentary. Every piece of news we got today matters. Let's unpack what's happening and why it could shift everything. Today's trading sessions to describe would be volatile, to say the least. Initial weakness on tariff news, a bounce on reassurances regarding the Fed, and mixed reactions to inflation and wholesale data that we got. Investors are really trying to read the room on these calls on tariffs, headlines, data, and Fed chatter. All of this stuff that we got in one single day. Then we had 150 countries to get U.S. tariff notices. So U.S. to notify 150 trading partners of their new tariffs. One tariff for all, likely a bit over 10%, which is higher than the baseline we initially thought. Also, there's news that India is reportedly close to a deal with the U.S. regarding their tariffs, and I know a lot of people are watching this one and excited for some potential good news. Japan negotiations are still ongoing, but it was floated out that we're likely to still see the 25% that was already announced previously. And then regarding these 150 smaller countries, Trump said that, and this is in my words, that we don't do much business with these smaller countries. So we'll just let them know what they're going to get rather than kind of go back and forth and renegotiate when we don't do a lot of trade with them anyways. So just let them know what it is and they could cry about it later. So even without the implementation of these, the threat of tariffs rattles importers and supply chains. Then news dropped that Trump was planning to fire Jerome Powell, and what we've seen is the reaction was that the dollar sold off and stocks dipped moderately. We've seen lower yields on short-dated treasuries price in an expected rate cut because if Jerome Powell is to be fired, whoever would replace him would likely be a Trump yes man and cut rates. So that explains a lot on the short-term treasuries. And then longer-term treasury yields went higher on these longer bonds, and this could be due to, all right, well, if they cut rates, that'll spur inflation, higher inflation expectations, higher yields on longer-term treasuries. So the dollar's move was probably due to a reevaluation of the Fed's, the U.S. central bank's credibility, because it's being politicized. If the government, if the president of the United States is telling the Federal Reserve what to do with the rates, it's kind of like manipulated in a way, which the reaction that we seen was a form of warning. Whether or not people sought out a bluff or not from Trump, there were some warnings though from banks, with Goldman Sachs, Bank of America, and Citibank officials publicly defending the Fed's independence following hints of negative consequences that could follow. Jamie Dimon over at JP Morgan and Chase, the first out, warned interference could harm the economy severely. So rather than Trump telling the Fed what to do, let them do their job. Trump later on came out and said that there wasn't a plan to remove Powell, but highly unlikely to fire Jerome Powell unless fraud surfaces, all in regards to this huge renovation budget at the Fed led by Jerome Powell. And this caused the reversal in the reaction in that downward move that we've seen in markets. Also, we got news from Donald Trump that he's expecting possibly Kevin Hassett as a preferred option to replace Jerome Powell whenever that time comes. So a lot of people will probably start toning into what he's talking about, listening to his speeches, and what he's hinting at possible inflation, interest rates, and the economy going forward in the case that he's possibly the shadow Fed chair. We also seen that longer-term inflation expectations ticked up a little bit higher today. The 10-year break-evens are now at 2.4% if we round up for the 10-year period, 30-year at 2.32%. Then this is following CPI and PPI data, and we'll get into the PPI here in a bit, but inflation expectations have elevated from here. Markets are really recalibrating what inflation might look like in the years ahead with all of the moving pieces we got, and it doesn't end there. So let's get into PPI, which measures wholesale inflation data. So PPI was flat year over year for total Core PPI slipped to 2.8% to 2.6% year over year. Goods prices rose just 0.3%. And while tariffs aren't fully reflected, they're starting to sneak into the room. They're creeping in, particularly in these electronics and furniture. And what this suggests is that inflationary pressures are coming, but still manageable for now. So keep on watching inflation data as it comes in. The summer months is where a lot of people expect it to be elevated. Maybe it calms down into the months of the winter, but remember, in the winter, we're getting some of these summer reads. So the winter releases that we get won't probably come until next year. And then we also got the Fed's Beige book. And what that flagged was tariff-driven cost pressures across all 12 districts. Firms are passing costs to consumers or absorbing them for the most part. Some offsetting via pricing or tech innovation like AI, helping to really keep things pretty calm. Hiring remains cautious, partly due to trade uncertainties and workforce limitations. And we also got some Fed speak out from, boom, from New York Fed John Williams. And what he sees is that tariffs to cause inflation increases, and inflation is probably headed towards the 3 to 3.5% range, with unemployment approaching 4.5%. And what he's really saying is, hey, I don't really support a cut at our July meeting. Maybe going forward, but what we might see is that price data are already showing that new trade barriers put in place by the Trump administration are lifting the cost of some consumer goods. More increases are likely ahead is what he's projecting. So it seems like the Fed's still pretty split as far as, hey, let's cut rates, hey, let's not cut rates. But tariffs hit 150 economies. Powell drama shakes the dollar. Inflation expectations are beginning to rise, and wholesale prices are showing early signs of tariff impacts, all while the Fed warns on next rate moves. Markets are tracking very close. If you're focused on true signals and not just stock tickers, this is the setup worth watching. Stay alert. Let's see where this goes, and I'll see you next time, y'all. Y'all have a good one.